Hi, I'm Joe Koicim, and this is the New York City Multifamily Podcast. Today, I'm joined by my dear friend, colleague of 20 years, and an absolute legend in the net lease world of real estate, Glen Kunofsky. Glen is the founder and CEO of the NNN Pro Group, the market-leading net lease brokerage team in the country, with over $5.6 billion completed this past year. Glen and I dive into many topics during our discussions, such as 1031 exchanges and bonus depreciation. Additionally, we talk through some real examples of the many clients we've had a chance to work with together, successfully selling their assets here in New York City, helping them increase their cash flow, and getting them away from the grind of owning and operating New York City real estate. I hope you enjoy the episode. Let's get to it with the one and only Glen Kunofsky. Welcome, everyone, to the New York City Multifamily Podcast. I have my very good friend, mentor, sometimes people think he's my father, Glen Kunofsky here. Glen, thanks for joining us. Glen is with the NNN Pro Group, and I've had the privilege of knowing Glen for 20 years. Thank you, Glen, for joining us this evening.
Thanks for being here. I'm definitely not your dad. Your dad's a special guy.
Oh, I appreciate that. And, Glen, why don't you just start off by sharing a little bit how you got into the business and what your firm does?
So we're 100% net lease specialists. We have a firm that specializes in net lease transactions, serving both private clients, institutional clients, as well as public tenants and private tenants, all focused on net lease real estate, both brokering, restructuring, and developing net lease.
So a lot of people may wonder why is Glen on a multifamily podcast, but the reason you're here, not because one of the reasons is you're the number one broker in your industry, and the biggest reason is we worked on over $1 billion of transactions together, helping our clients exchange into net lease assets because we sell a lot of management intensive New York City apartment buildings, and we help facilitate the 1031 exchange for most of our clients. And Glen is the recipient and the solution to that. So I wanted to get into a little bit of some of the transactions that we've done, and but first wanted to kind of give us a little bit more insight of what makes your company unique and how you help help your clients.
We're the largest company that only does net lease. You guys are a big firm, but we are 100% specialized and focused on net lease. There are no other firms out there besides us that have a sole focus. And in this day and age, I believe specialization, same way you specialize in New York City, net lease is a big property type as a whole. Trying to be experts at one very specific niche is how we think about things, and trying to be the best at what we do and interact with people like you that are the best at what you do, and helping serve people in a way that gives them that specialized advice to make the money and navigate waters like today.
Tell us a little bit some of the deals going on right now, what you're seeing in the market on the net lease side. Obviously, interest rates are impacting the real estate market, and how is that impacting your specific asset class?
So there's good and bad, obviously. Rates rising, affect every type of real estate class, including net lease. But we're still seeing, the net lease industry, even though I've been doing this almost 25 years, I think is still in its infancy as an asset class. Like, multifamily has been around for hundreds of years. If you ask, even today, if you're sitting at a cocktail party and you say to someone, "Oh, I do net lease," I'd say 75% of the people that are not be in real estate have no idea what that means.
So why don't you tell everybody what that means?
Net leases are very simple. It's a document and a property type that dictates the relationship between the landlord and tenant. And essentially, these are real estate assets that are leased to tenants, where the tenant is taking on the majority of the management of that asset. And in a triple net lease, essentially, which is 90% of what we do is where the tenant's not only focused on, not only obligated to pay you your rent, but they're the three nets basically are, the maintenance of the property and upkeep of the property is all falling onto the tenant. The insurance costs and the increased insurance costs all fall on the tenant, and the property taxes. So those are your triple net. So essentially, you can own these properties and be out of state, wherever it may be, because of the structure of the lease. So you have many different property types that fall in, but the actual structure really is that document that you're buying the fee interest in a property, and it's dictated by this lease. And, we sell assets from retail, industrial, what we call specialty use. There's a lot of interesting things out there. We do a lot of car washes, as you know. We've done funeral homes, we've done infrastructure, basically any type of fee property you can put a lease on, we've either underwrote or touched at one point or another. But to answer your question about what's going on in the market today, the exact structure of a net lease, which a lot of people in the past, including a lot of our joint clients that were moving from multifamily into net lease, the worry was, what kind of appreciation am I going to see? I'm only going to get this statutory return that's in the lease, and how is it going to be? What a lot of the people didn't take into account, which I'm sure you're seeing today, and I'm going to interview you and ask you some questions. But on the expense side of things, people weren't ever asking about that. The beauty of the triple net lease is what I just said. The tenant is bearing all those risks. And as inflation has gone up, the tenant is paying more to operate the business, more on the construction side to replace the roof, more on the side of when there's maintenance, when there's employee issues, when there's management, all that stuff, as opposed to other types of real estate. People compare multifamily, and I'm not trying to talk people out of owning multifamily.
Well, we know you love New York City multifamily.
Multifamily is great, but it's a business, and you have to operate that business, and there's things on the expense side that have gone crazy. Everyone talks about rental growth, which I think, you know a lot more about this than I do, but on the expense side of things, I'm not sure. I'll ask you the question. Have expenses outweighed the increases that are getting in rent today in New York?
No. The short answer is no, and a lot of that has to do with the regulations that have impacted our business and the rising real estate taxes and the rising insurance costs, and rents are not catching up to those rising costs. So on the flip side of what you sell, and you just mentioned, the tenant is taking that burden. So if they have a 20-year lease and all these costs have gone up, how is that going to impact pricing and the sustainability of some of those tenants?
Well, the tenants, obviously they're underwriting the obligation when they enter into the lease, and they understand what those obligations are. A lot of the metrics that we look at for our client are how the credit of the tenant, because you're getting an obligor of that is obligated to pay not only the rent but all those expenses I discussed. So you usually have vision into what their liquidity is, what their debt situation is, what their credit looks like. So that's the first line of who's signing and obligated to pay these things. Then even further in our leases, a lot of times there's reporting, how the particular unit is doing. So you as landlord can sometimes get insight into, okay, how are they doing at my location? How are they doing as a company as a whole?
Is that what we call unit economics?
Unit level economics. It's an important thing that you and I have gone through many times
with
together.
Many of our clients. Yeah.
Many clients. But to the point of getting back to the market, it's something that people are really now seeing in this structure, that maybe the return, looked worse going in than some other type of real estate, whether it be, we've worked with so many clients over the years, and they said, oh, well, maybe I'll buy a shopping center, or maybe I'll buy, residential real estate in another state that might appreciate. All those things have operational risk, and the net lease doesn't. So a 5 cap multifamily deal and a 5 cap net lease aren't created equal, where, how you weigh those different things are important today, and more so now than ever with inflation and with rising rates. People are seeing what it means, to operate different properties. It's not just New York multifamily. It's shopping centers all have the same thing. People are like, oh, I'm going to buy a shopping center and have diversity of tenants and be able to do all these things. But yeah, you have to maintain the walkways and the roofs and
all those costs
and the parking lots, and all those costs have gone up. And, you have to go and try and recoup that. So it's more of an operating business. But as a whole, the net lease business over my period of time has advanced a lot. There's a host of institutional players and publicly traded REITs now, more now than ever, specializing in this asset class. There's a whole host of lenders that are still very interested in this asset class. And I think it's still growing. And, we work together almost every day talking to clients about people. And sometimes it's a monetary factor, sometimes it's not a monetary factor about where they spend their time and how they have to operate. There's return, there's numbers, but as you know, certain people don't want to operate these assets anymore. It's a management intensive business on your end, and either they don't have the ability to do it anymore, they don't have the heirs to take it over and want to transition. So I'm still, very bullish on the net lease industry. We are still, the cap rates I don't have moved in certain classes. I would say in the under $3 or $4 million category, cap rates, have really not moved that much.
But how is that possible if rates have moved almost, double? Because my business has been impacted, right? And it has been adjusted. New Yorkers, as you know, are a little bit more stubborn. So sellers haven't moved as quickly. But I would imagine all the nice people you deal with in the Midwest and, that they understand what's happening and the impact. But why has cap rates kind of stayed, even?
So you interrupted me and didn't let me finish.
I never do that to you.
What I was saying is I view it that there are 3 or 4 categories of market. It's mostly based on pricing. So when I said under $3 or $4 million, you're having a lot of all equity transactions, and I'm sure this is pretty similar to your business. If there isn't financing involved and there's demand for high quality net leases, you have a lot of all equity transactions or a lot of low leverage transactions that is still driving investment diversity and everything. So those cap rates haven't been impacted that much, and the velocity is still fairly, what I would say, it's down in velocity overall, but that is still a very liquid market, that we put assets on the market, high demand, and if they're priced correctly at lower cap rates, even in the higher interest rate environment, they haven't been affected as of yet that much because of the supply and demand imbalance. As you get sort of, in that $5 to $10 million range, you start to see more financing being used, and cap rates and velocity has slowed a decent amount more there. And then as you get above 10 million in terms of single asset pricing, you really start to see the cap rates and the velocity being impacted. But there's a lot of institutional demand, the REITs and this is an indication of why net lease is going to continue to grow. People are pouring money into these publicly traded REITs. The dividend yields have stayed relatively low, and it's another way of investing in net lease. So those have kept some of the bigger institutional cap rates a little bit lower, but we work on some transactions that are a few $100 million, pushing the $1 billion range, where we're in the sale leaseback market, and those cap rates have definitely moved, 200, 300 basis points as a whole. So it just really depends on the size when you talk cap rate.
Yeah, I know you did about $6 billion of sales last year. How many transactions was that? Because your average transaction size is...
It was a lot of properties. Some are grouped into portfolios, some one-off, but it's a high velocity business on both the institutional and the private side, so it keeps us busy.
You mentioned, the REITs and the institutions, but are you seeing other buyers come to the market, right? You have the 1031 buyers, a lot of our clients that sell, management-intensive properties that are buying net lease. Are you seeing other capital flow in because it's become such a, more popular asset class now? It's becoming more popular? Like you
We
said,
are.
it's in its infancy.
I've always said,
Yeah.
and I think there's a lot of crossover and similarities to our business. Like, and you can answer this question for yourself too. Like, into New York multifamily, you've always seen these international buyers wanting to get money out of their home country for what reason or another, relative to the stability of the U.S., the stability of New York, the high potential for property appreciation. What I always tell people, like relative, and we've seen this over my career, more and more people internationally who want to invest in U.S. real estate. It's not easy to do a management intensive real estate. So you saw it on bigger projects with sponsors and operators pairing with Capital International. The beauty of the net lease is you can be in Singapore or China or Israel and own a net lease and be relatively efficient as a landlord, and it's not going to take up a lot of your time. So that type of capital and promoting net lease as an asset class globally is part of our mission, because we do see people, and just like I said, state by state, you can move around internationally, but there's a lot of funds now that are non-public, that people raise money in different countries to invest, and net lease is getting much more popular in that area as well.
We worked together for 20 years, and I've always, admired and inspired in terms of how you ran your business. And you've always made some pivots along the way, right? Different within the net lease space, different asset classes. What are the recent pivots you've done? What's on the horizon? You're always kind of changing with the market, and love to hear more what you're doing there.
It does stay consistent. Like, as you know, like the whole philosophy around how we built the company and our mission, vision, values, really revolves around relationships over transactions. That's why we've had a 20-year relationship. That's why
repeat business.
Repeat business. We've done very little marketing. We've done very little advertising or business development. It's, I guess I could say it in a negative or positive way, that, referrals are our best source of business, keeping our clients happy, growing the relationship. So, repeat business, almost looking, holistically at someone's portfolio and building trust with both our clients, our employees, and the people like you who we built business together. And we have joint clients, and those relationships matter, especially in times like this. As you know, people, like where we're seeing business growth is there's a lot of weaker competition out there. People got into the net lease business because they thought it was easy and they could pitch it to people. And so what we're seeing in terms of people want high quality advice, they want specialization, and that's why they're coming to us. So it's really not a pivot, but you're doing more for less transactions. And we've added just business lines that are just really helpful to our clients. Like I talked about before, like on the institutional side, we've added, construction management services and helping our clients that we're brokering transactions more efficiently, build their buildings, and partnering with them, to give advice on construction. So that's been a big business shift. We've also helped like a lot of the private landlords, both during the pandemic and after, on lease advisory, and financing, how do we help you and add additional services to the same relationships we have. And then the pivot really is just doing right by these people. They refer you to other people, and whether you're reporting good or bad news to them, whether their property is worth more or less, being honest and direct and providing the best advice that you can.
And I think we see that firsthand, right? We have a mutual client that we sold our team handled his sale in New York City, where we sold a $150 million portfolio at a 3 cap, and we went into net lease assets, right, that Glen and his team have helped facilitate, and I think he bought about 25 net lease assets, and now it's coming back full circle where he's selling the net lease assets and coming back into the New York City market and other multifamily markets around the country. So, back to your point of helping clients where they come back and, really utilizing it as a tool to defer taxes, right, on the exchange side, which we could talk about for a few minutes. I know you like talking about 1031 exchanges, and it's been a really helpful, to have that relationship that, kind of comes for full circle. So.
I mean, you and I think the same way on a lot of these things, and whether it's a 1 cap or a 10 cap, Joe, it really doesn't matter.
Yeah.
It matters in the sense.
What's your nickname? You had to have a nickname.
I keep cap rate out of my nickname, and not many things rhyme with Glen and Cap. So
we gotta work on that.
We don't, and building the company and doing more branding and our specialization. We're working on new release of how to basically market ourselves in a bigger way around the country and around the world, but it doesn't change the philosophy of how you do business.
Sure.
If you do right by clients and you're honest and you give them good advice, they keep coming back.
Where did that come from for you? Because you've had an amazing career, where does that stem from? I know you were a hustler in college, you bought real estate, and, you were always an entrepreneur, you still are an entrepreneur. Where does that stem from?
It just, I don't know. I think it's got to be the upbringing of my dad wasn't really a businessman. I think we share, my
Sure.
dad was a teacher and a principal. And, his guiding advice was always the golden rule. Don't screw someone over. Don't burn a bridge. And it just stuck with me. I'm not smart enough to do things in any other way to get around, to just do right. It seems very simple and ethical. In our industry, as you know, there's a lot of people that aren't ethical, that aren't honest. And if you stick with those principles, it works. And I think it just came from the way I was brought up. And also when someone's not happy, addressing the problem head on, trying to figure it out, as you know, today with the capital markets the way they are and stuff, and having conversations with people that aren't pleasant is more important than having the pleasant ones.
Yeah.
So I think people respect that, and I was just brought up that way.
What I learned from you, though, is playing the long game, right? That was something that resonated with me a long time ago when I listened to you give a bunch of talks. And, I think when I first started at the firm, you wouldn't talk to me for about a year or two because you didn't know if I was going to be around. And I'm glad we're still around together. But I picked up a lot of things over the years. And that was one of the big things is, playing the long game. It's not about the first meeting and the second meeting. It's just continue adding value to the client. And I think that just shows from all your success and what you've done.
I appreciate that. I was talking about it today. Real estate, as you know, is a long-term asset for people, and people make, they're not making decisions usually on a daily basis about their real estate holdings. There's opportunities where people are making switches in their portfolio maybe every 5 or 10 years sometimes. So being around, communicating, as you're the expert on keeping the relationship, having fun with your clients, becoming friends with these people and understanding their motivations and their life situation and how what's going on in their life impacts their investments, I think is very important. I don't think many people in our industry think about themselves as a advisor. They think about themselves as a broker, and they talk about I hate the word deals. People keep talking about it's someone's long-term investment. And
It's not a transaction game.
It's not. And as you said, it's the long game. It's how do you best serve someone long term? How do you match, your long term goals as an advisor with the client's needs?
Sure. Let's walk the audience through what we do, though, right? Because not everyone knows about the 1031 into net lease assets. So give the quick thing on 1031, in terms of how it's helped your clients, yourself, in terms of handling sales and, facilitating for many different clients over the years.
Well, just to, break it down again, it's 1031 is obviously a section of the tax code. Yeah. If, you and I deal with it every day, people who may even own real estate for a long term. Like, we have clients that we've constantly met with over time, and they may own hundreds of millions of dollars of real estate and not done a 1031. Yep. So, but the basics of the 1031 code is it lets you buy one property, lets you sell a property that's held for long-term investment use, and buy another like-kind property. Like-kind is pretty broadly, defined in terms of fee ownership for fee ownership, and there's some other little nuances of leases and other things that qualify if they're long-term enough. But the basics are you can sell an asset, and if you reinvest the money within the rules of the code, which is 45 days to identify, there's several ways to identify, and then you have to close coterminously in that 180 days. You don't have to recognize the capital gains tax. And it's a really big advantage for real estate owners to take advantage of and be able, as opposed to some other asset classes or investments like stocks or bonds, you don't have that ability. So as you see the stock market run up and down, people look at a piece of paper and they either have to recognize big gains or ride it up and down. With real estate, you have Section 1031 for now, like let's knock on wood together.
It's not going anywhere, right?
It's not. We hope it's not going anywhere. If
it does, you have a job with me. Don't worry, Glenn.
Perfect. Well, I think people are going to be holding their multifamily too. That's the basics of the 1031 and how we've helped clients. I think, you especially have gone out, explained this to people, explain that they can do this on certain pieces of their portfolio and not others, and how best to optimize what should be held in their New York multifamily program, what might be sold, what might generate more cash flow. So I feel like people don't explore that. We do it on a routine basis and work together by sitting down with people and saying, okay, here's your 5 properties that you own. Here's where we think there might be future appreciation if there's work or law change. I hear you do it all the time, hoping for some reform to what's going on. And then saying, okay, like maybe you want to transfer in 1031 and do with some of these properties. And then what happens is people start to make lifestyle judgments, as you know, where they'll do 1031 and they own 10 properties. Then all of a sudden, 2, 3, 4 years later, they're doing it again. And like the story you're talking about with our joint client, that they can go back and forth with 1031 between asset classes. So that's the exciting thing about what we do.
Biggest challenges to overcome when the client says, I don't want to own in Kansas. I don't want to buy a net lease, CVS, because, I think drugstores are going out of business, right? I mean, we hear it all the time, right? People are naysayers. They don't understand it until they get a little taste of not paying taxes and getting the income stream, direct deposit to your bank account. How have you overcome that many times? I've seen you do it firsthand.
Well, it's called choice, first of all. We don't make you do anything. You make decisions on your own. It's your money as the investor. But explaining, sitting and educating people, one of the, what I stress to all our brokers, to our clients, is everything has risk and reward. People come to and say, like, the objections of I don't want to own in a certain place. You don't have to buy there, but then explaining the benefits and the reasons, tax-free states, or I don't know, where did you say they didn't want to own? What was the state? You said Missouri?
Kansas? I don't know.
Kansas is a great place. It's growing. I was there 2 weeks ago.
How do you're everywhere. How do you do it? Gary, we'll talk about that after.
We as a company see every asset that we sell. We encourage all our clients to see what they're buying and go. That's a good point. Like, you may in your head as a New Yorker or someone that's, only invested in a small pocket of the world, whether it be New York or Florida or where you're located, once you get out of your bubble and you look at some other places and you see what's going on, it's exciting to be able to diversify your portfolio. And certain properties aren't for everyone, but sometimes one of our agents gets on the plane with someone, takes them from LaGuardia to Kansas City. They see there's good food, there's people, there's
life
growth.
outside New York.
They're building multifamily. There's no rent regulations.
Sounds great. Thank you for taking me out of my bubble. I appreciate that. And you can actually get cash flow. You can actually get cash flow.
You get cash flow. You're not having the daily risks, and educating the client is what we like to do. I like, my days have shifted as much from educating clients to educating our brokers and partners about the asset type, and teaching people and mentoring and, growing the relationships together with our brokers and our team and our partners like yourself. Like, that's the fun part. That's, where the value comes in. And you and I have had many conversations. Like, I don't know anything about New York City multifamily that has not been taught by you.
I appreciate that.
But when you talk to someone, if I ever have a question about something in New York, I go to the expert, and that's what I'm proud of for our asset type.
So we talk about 1031, we talk about the net lease asset, and there's specialties within the net lease asset that you talked about. Let's just give the audience a little bit about bonus depreciation and the benefits of that, because there's a whole nother world out there to save taxes as well. And if you want to touch upon it, that'd be great.
Sure. As you know, we've done a lot of transactions related to the Jobs Act is what created the bonus depreciation. And similar to 1031, there was a law passed in 2017 about certain asset types and property types that could be bonus depreciated. We do a lot in the automotive service world, and we do a lot in the car wash world. Car wash assets are a little bit unique, where it says in the code in the Jobs Act that you can 100% bonus depreciate. Well, it's faded down now, but originally in the first 2 years of it, 100% bonus depreciate car wash buildings. The other assets that qualify for bonus depreciation were assets that fell into, and they still do, fall into useful life of depreciable basis of under 15 years. It's a little complex, but not the whole building. So when it comes to taking advantage of bonus depreciation, at first it was 100% in year one. The act had provisions where it flowed down the benefit. This year we're at 80% depreciation.
Still pretty good.
It's still very good. So, real estate owners that have high income, similar to 1031, can buy properties that have this bonus to basically help offset their ordinary income. A lot of your clients or our joint clients have a lot of income from real estate, maybe less today because their expenses have gone up and haven't kept pace. But a lot of them have a lot of income. A lot of them have low depreciable basis because they either inherited the property or have owned for a long time, and they don't have any deductions against it. So that 1 year bonus depreciation can be very valuable to people who are in the real estate industry that can qualify for using that bonus depreciation against their income. And we've done, I think last year of that, almost $6 billion of transactions. I want to say the numbers around 1.7, 1.8 billion of car wash properties. And a lot of that was driven by the bonus depreciation that was available and getting the word out. And you as a partner got the word out to a lot of people that could use the bonus depreciation, and educated them collectively together, and proud of all the money that we've saved and the wealth that we've created by doing that.
And this is also for capital gains income, right? Not
yes,
just, it's your active income, ordinary income.
You can do it on both.
Yeah.
Obviously, ordinary income is taxed at a higher rate. So the benefit is a little bit better. But yes, we have strategies around, a blown 1031 or just not doing a 1031 and using the bonus depreciation to offset the gain is another big strategy out there.
I have an
as
idea.
well.
You mentioned about rebranding. Like, you were the tax saving man. Maybe we got to rebrand something. We help so many clients over the years, and people come back to us afterwards and just realize like how much savings they actually put in their pocket, right? And it's just something that not everybody knows about, especially in New York City, around the country, in terms of being able to save different ways. So,
I think it's like anything else. Like, tax efficiency. I'm not a tax expert. I'm not an accountant. I'm not a tax lawyer. But speaking with the experts, as you know, and educating yourself, and then using that information to help your clients and really get involved with experts in those fields is what also drives me every day, which is exciting. And it's exciting to when a client comes up to you and say, hey, I completed 1031, my life is easier, or my tax bill was that much less because I bought a bonus depreciation asset. It makes you proud and it makes you feel good.
Now they can sit on the beach and hang out while we're still brokering. Why do you keep doing it? You just love it so much.
When you're wired a certain way and you like what you do, you're smiling, you love what you do.
I love working with you.
Yeah, me too.
All right, good.
I what drives me is working with you, Joe.
That's what I wanted to hear. All right, let's move on to the next part of the program. We're going to wrap up here because Glen has to spend some time with his daughter before she goes back to college. So besides me, if you could pick one person to have dinner with, dead or alive, who would that be?
Wow, that's a hard question, Joe, and I didn't read the questions before
I didn't send you this one.
Here.
This is the fun part.
Dead or alive? Interesting. Let me get back to you on that one.
I'll go back to another fun question. Hold on. I know you have a lot of great strengths, but what do you think is your real superpower in this business?
It's not to try and dodge the question. There's no superpower, just hard work, right? Yeah. It's the grind, right? You and I, whether it's, meeting fleet people for breakfast, getting on airplanes, showing them things, using all your grit to me in terms of working harder than the competition, investigating these things for your clients is really what's out there. Do I think I'm smarter than the next guy? Sure. About my one area of expertise in net lease, I think, both myself, my partners, my company, we're very good at a very specialized industry, but we also are going to outwork anyone for our clients. Yeah. So that grit, the hard work is what drives. That's it. Yeah. And you're doing the same thing.
I appreciate that. That means a lot.
I see you out at midnight talking real estate all over the city. There's not a place I can't walk into without you where, they're waving you down and you're like a celebrity.
I think I went to lunch yesterday and I ran into 9 people. I don't know if that's possible, but I think I did.
I like to tell a story like we're walking in Central Park at 6 a.m. and people are driving by at like, Joey, you can't even get in. You're a celebrity. You know everyone and you know everybody's story. It amazes me. What amazes me, your ability, not only, and I know what it is. It's the personality. It's the drive. It's you're genuine, but the fact that you have this database in your head, I'm sure the New York multifamily team now has the best CRM in the world, but you don't need it.
Yeah.
It's in your head.
Face recognition. I have the iPhone face recognition. I know it. Yeah.
In your head, and how many properties the guy owns, how many times he's been divorced.
Well, just like you're a master of your asset class and your market, and I followed the suit. 1 or 2 more questions, and then we're going to wrap up. If you weren't in the real estate industry, what would you be doing?
I really don't know.
Really?
I don't. I started in real estate at 18. It's all I know. I still love what I do.
Fisherman full time? Nah, you can't make money doing it.
You can only fish so much, Joe. And if fishing would get boring doing it every day, and I don't think a fishing captain is going to pay the same type of bills as.
You're a great captain, though. So when you figure out how to ride the boat, drive the boat.
I have a lot of doing the fun things with the people you like, both people that you work with, spending the family time, whether it's skiing or fishing, but the passion for liking what you do means something. So
I agree with that.
I can't answer what I would be doing if I wouldn't be doing this.
You got to answer one of
I'd
these
probably
questions.
be doing something much harder and making much less money.
I know most of your business is outside New York, although you do a bunch in New York and you deal with a lot of investors here in New York. And you traveled all over the country and you see how other cities operate and how other states operate. You always complain about, you live in New York City, and you always complain about the multifamily because most landlords, and you are a landlord or were a landlord of apartment buildings in the city. If you could be mayor for the day in New York, what would you implement?
I think it's really hard, and it is interesting traveling around and looking at real estate all over the country and all over the world. You get in the hobby of I'm sure when you travel for pleasure, you're in London somewhere for a wedding or an event. I wonder what that multifamily building, what cap rate is this? Is this a Joey 1 cap or is this a 20 cap? It's interesting, and I never, I'm not a political person or anything like that, but you see these places and you can see why some places are growing, and the issues are very complicated. There's things that are way above my knowledge level, but I do believe free markets, less regulation, drive places, and you see it. You see the difference of why people are building 500-unit complexes outside of Nashville, and why people are moving to Florida, and why. But it's interesting. There's the known places, and then there's the unknown places, and the people and the entrepreneurism of the different businesses that we work with and the different people. It's really interesting to see. When you sit and you talk to a person that has only owned New York multifamily their whole life. This is what the environment they work in. That's all they know. That's all they know, what they do. And then you get them out of their element and you're showing them something new. They quickly pick it up. And it's also interesting when you're pairing what's fun about the business. We may be meeting with a developer in Kansas or an owner in Louisiana, and then selling them and then pairing them with someone who's coming out of New York. The mindset is a little bit different, but really people are all, especially in business, and I like to divide business from social or political issues, but the drive to be an entrepreneur, make money, invest money, it's the same almost everywhere. And the people who are good at what they do, it really doesn't matter. And people, there's a desire to change the world and help everyone. And I think we should all have a great standard of living. But, investing, it takes risk and reward. And the people that we deal with every day, they've taken big risk, and it's fun. So seeing the different people around the country and their views about investing and politics and everything is fun.
Awesome. Well, thank you for taking the risk of coming on our podcast today.
No risk here. It's great. It's great to be with you. Great to spend time with you, Joe. Thanks for the opportunity. Thank you, everyone.
If you need to do a 1031 exchange, you know where to go. Glen Kunofsky of the NNN Pro Group, and I'm Joe Koicim from the New York Multifamily Group. Look forward to seeing everybody soon.